Welcome, 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 everybody. Thank you very much for sticking with me here during our radio silence. My name is Red Baron. Thank you very much for joining our Monday night crypto chat. So we've been away for about a week or so because we've been doing an awful lot of back-end work here and getting things going. We're going and growing, guys. It's awful nice of you guys to spend some time with us here. So we're hitting 3,000 subscribers now on YouTube. That's awesome. Glad to have you guys be a part of what we're doing. So we're back on our Monday night broadcast, which is, of course, Crypto Chat. And we've got Red Bear live on the phone here. We'll get to him just in a minute. Now, guys, we're going to do things a little bit different now going forward. We have, in the past, we have done a little bit of market analysis. I looked into market stuff during the show. We're not going to be doing that anymore simply because these shows are intended to be somewhat timeless. We want them to be able to survive for 6 months, a year. You know, relevant information stays relevant. And so if we're doing market analysis and we're talking about something that happened 6 months ago, that's not really relevant to the show. So we're going to kind of keep it on topic and just discuss the topics at hand. We're going to stay out of the market stuff here in upcoming broadcasts. And we'll be doing a later broadcast here tomorrow. Same normal type of the stuff that we do with charting and analysis, but we're not going to be doing that during tech chats anymore, simply because we want to be able to keep everything somewhat evergreen is the term that they use for that. So, all right. So give me just a second here. Let me kill my mic for just a second, get a couple things set up, and we'll go ahead and get started. So, of course, if you guys are new to the show, we'd love to have you join us over at our regular Discord, which is at, theunfairadvantage.chat, which is our free Discord. If you guys would like to be a part of a community that does crypto trading, that doesn't have a bunch of spammers, a bunch of shillers, a bunch of bots, a bunch of people that are just talking nonsense. If you really are interested and passionate about cryptocurrency and you want to be part of a group that really shares your love for that, and adults that are serious about making money, certainly join us at theunfairadvantage.chat. There's no chance or no cost to do that. You can come on in for free. All you simply got to do is just follow that link and just hit the magic chicken bones twice. Just follow the instructions, and that's how we know you're human. You click on the bone twice. That authenticates you as being human, and you'll be led into the Discord free of charge. So if you'd like to subscribe to the charts that we normally use, which are on our normal broadcasts for the rest of the week, you can do that at fibicharts.com, F-I-B-I charts.com. And you can get our charts that are part of our AI-powered predictive software featuring Isis and Anubis, our two AI predicting bots that forecast the future, kind of like a digital crystal ball. All right, so I got Bear on the line with me. How you doing, Bear?
I'm doing good. How are you doing, Red Bear?
Good. So what are we going to talk about tonight?
So tonight we're going to go over the basics of blockchain, ETH bridges, and the USDT, and how to use USDT in a way that is the most efficient for your portfolio.
Okay.
We're going to go over cross chains and stuff.
Let me do a little bit of a. Are you guys hearing him okay? I'm working off of a different phone here. We got a little bit of a different audio setup tonight. So you guys hearing him okay? Got to wait for a little bit of a. Give him a testing 1 2 3.
Testing 1 2 3. Can you guys hear me all right? We're trying a new phone setup here, so we just need your guys' feedback, if that's all right.
A little bit.
Nice. All right. Looks good.
Okay. All right. Carry on.
All right. So we're going to be going over how to use blockchains for starters here. So as most people think of blockchains, they think of ETH, they think of Bitcoin, they think of these things kind of siloed. They don't really understand how they work together and how the ecosystem actually operates. If you want to bring up my screen here, I got an infographic that might help some people gain some insight.
There you go.
All right. So how this works basically is that you have parallel blockchains that all kind of do something similar. Certain coins are tied into certain blockchains, but over time, individual blockchains are creating these things called ETH bridges, or bridges in general. For instance, I'll get into this a little bit later, but Reef, one of the reasons why we're so bullish on Reef is actually the king of interoperability right now from my site.
Yes, it is.
Of bridges. So it's got, I think, currently 5 or 6 bridges that is actually able to get access to different blockchains, and it provides liquidity to lots of these different blockchains. So it's actually quite unique in that individual case for being so interoperable at this time. But I'm going to stay focused right now. I'm going to keep on going on with this because this is what you guys have to understand first before you can understand that. So XLM is a good example of a blockchain that actually carries value in the form of USDT. I think it has USDC now as well. That was a new addition. And basically what it allows you to do is send stable coins from wallet to wallet, from exchange to exchange, without having to pay the ridiculous ETH fees that we currently are used to. With back during the height, during May, it was $20 to send USDC or USDT to your wallet, which is excruciating if you're trying to do any kind of swing trading or even just moving money around it, to make it more secure. So what has been developed and what we're actually working with here was a lot of people were just continuing to use ETH because they didn't know that there's other options available. But the options are actually quite numerous, and I'll give you an example of how you can deposit and withdraw. So let's see here. Actually, that's wrong. Open this. Okay. Here we go. All right. So this is an example of a deposit slip. This is from KuCoin, and this is basically how you're going to do deposits and how you'll do withdrawals if you guys are interested in learning how to use cross chains and different kinds of chains for doing basically efficient transactions. So what you're going to do is basically something, it's very simple. What you're going to do if you ever send money is you just have the deposit, you have the wallet address, and then you put your wallet's address from your withdraw chain into the deposit slip. So you have different options here. That's really the key takeaway, though, is that each option has different speeds, different advantages, and my most important thing is usually cost. So I prefer Tron because Tron's pretty cheap. XLM's really cheap. There's a lot of options out there that are cheaper than ERC20, and not every single exchange supports every single chain. So what you're going to experience when you see these things is that you're going to have to actually whittle it down. So for instance, if you're going from Coinbase to KuCoin or Binance to KuCoin, they have different token pairs. So you have to make sure that you have the correct token pair. So the key takeaway here, this is for like the very beginners, is that you can only send money on the same chain. So that's the key takeaway. So you can't send ERC20 to TRC20 directly, right? You'd need a token wrapper, which is a little bit more complicated, but you'd have to do that first, and that would have to be handled through a third party. You're not going to be doing that through KuCoin to Binance or something like that. You'd have to send that to a third party. They would wrap the token for you, and then they would send it off to somebody else. So a good analogy of how that works actually is, I was just talking to C-Trem about this the other day, is that so imagine you're on a ferry, like a boat, and you're going to an island, right? And you're going from the island of ERC20 to the island of Tron, right? So you take this ferry, and you get to the ferry master at the new port, right? So you can't drive around this new island until you get a car. So the ferry master gives you a car, and that car is basically the token wrapping process. So he locks up your ferry and says, you cannot leave this island until you give me back the keys to this car. So your token is wrapped up with that ferry master. So now you can drive around all over Tron land, right? All interacting with all the different Tron ecosystem, doing Wink and all those other kind of Tron coins. And then if you ever want to go back to Ethereum, you have to go and actually give your keys, or in this case, your Tron coins, back to the ferry master. He'll exchange it for your ferry, and you can go back to the land of ETH. So this is kind of like a whimsical analogy, but it gives you a good idea of how this actually functions. And for people who don't know how this works, this is actually, in my opinion, quite literal to how this system actually works. You have to make sure that you actually literally transition your tokens from one person to another, and the tokens are locked up, so you can't use those tokens. And that's basically how interoperability works at its core, is you have lots and lots of little token lockups, and then those are unlocked by bringing those same individual coins back to that same lockup, and then it's released. So it's kind of like a pawn shop in a way, except way better deals.
Rates are
so
the rates better.
Yeah, Yeah, rates are way better. Exactly.
ETH is a pawn shop.
Yes, it is. So Zill recently released their new version of a token bridge, which means that they have a DeFi exchange called ZillSwap, which means now that you can trade Zill tokens on ZillSwap as well as ERC20 tokens on ZillSwap as well. But the ZillSwap tokens, or I should say the ETH tokens, are wrapped into the Zill network, so they'd be like Z. They'd have like a little Z at the front of them. That's usually how you can dictate if something is wrapped up. For instance, there's a lot of coins that are wrapped up on Binance Smart Chain because ETH was the first one, and then Binance Smart Chain developed a bridge to ETH, and then now there's a lot of wrapped up tokens on the Binance Smart Chain, including Cardano is wrapped up on there. So that's why a lot of people have been switching over to the Pancake, because the rates are so much cheaper. There's obviously offsets with that, like Binance Smart Chain. There's a joke about it because basically the entire network is run by Binance, like the entire validator network. It's super centralized. In a way, it's almost, if you want to talk about a security, like Binance Smart Chain or the BNB token is way more of a security than XRP is, because how involved Binance is in the token itself, setting up the validator nodes, owning majorities of the project. You can pay with ETH fees, or not ETH fees, but you can pay transaction fees on the Binance centralized exchange. So you pay your fees for reduced cost if you use Binance or the BNB token. So BNB token really is quite the interesting thing. So I don't think it's going to be the kingpin that they were designing it to be, because it's not really decentralized like a lot of people want it to be. Like, that's one of the main draws for Ethereum in the first place, is how decentralized it is. But that's why I still believe there's a lot of room left in the space, because what Binance sacrificed in centralization, they made up for with speed. That's why they were able to enable so many of these changes so quickly and become such a pack leader so quickly, because they were so centralized. So that gives you kind of an idea of how the system works. Is basically, you have Zill here. You can switch it from Zill. There's the ferry master right here. Is this polygon in the middle, and then gives you the ETH tokens, and then they can go either way. So there's a lot of tokens that can do this. I think Tezos has an ETH bridge. A lot of tokens are able to have enabled these ETH bridges just because the majority of the value is locked up in the Ethereum network in the first place. So you don't really have to worry so much about how ETH is going to be interoperable, because everybody's eventually going to hook up to ETH, either through secondary coins, for instance, layer 2s, or through directly through their layer 1s. So the system is basically going to be kind of like a human body, where you have blood cells, blood vessels connecting to every other part of the body, and eventually you can write a smart contract to go anywhere in the ecosystem that you want through any kind of loopholes or whatever, because that's just what the markets dictate. If you put a roadblock in place, it can be written around as long as they don't burn every single roadblock to the ground along the way. Basically,
right.
There might. Sorry, go ahead.
No, go ahead. That's fine.
Okay. So basically, what you can do is that way you can make sure that your network is secure by making it so that it's difficult to shut down. And this is where the main argument for privacy coins comes in, because some people say, well, they're not going to shut down all the gates. Some people say that they can shut down all the gates. It really is going to come down to what the people feel that they're capable of. So are they going to be able to create barges floating out in the middle of the ocean with server farms running on them, basically kind of like the pirate radio back in the day? Are they going to be able to do that kind of thing? Are they going to have the resources available to do that kind of thing? Is the government going to go out and shut it down directly? Are they going to be able to set up ecosystems where they can do things on Raspberry Pis and hide them in trash cans all across New York City? There's a lot of ways to set up the system, and it really depends on human ingenuity at the end of the day. Are humans going to be capable of doing this? Are they going to be capable of outrunning the regulators, basically? Kind of like how the Pirate Bay, if you guys ever followed the Pirate Bay saga back in the early 2000s, how they were doing all kinds of crazy stuff, like having drones on, flying with servers, that kind of stuff. They were incorporating all over African countries just because there's less regulations over there.
Mm-hmm.
So it was really interesting to see how decentralized systems tried to fight the centralized systems. It seems like the Pirate Bay kind of has been whittled down through sabotage. That's kind of how they've done it. Like they poisoned the well, so to speak. Like everything's virus laden now over there, so you can't really utilize it very easily. And that seemed to be how they kind of defeated it eventually. It was just to make sure it's okay. We can't get rid of the well, so we'll just poison everything that's in it, basically. So, but anyway, that's kind of how XLM, ETH, ZIL, and all the other layer ones, which is what you think of when a layer one is you think of like a sub token. So like Cardano currently doesn't have its own smart contract system, so it's operating on a layer one system. So that's how these layer one systems work. Basically, they carry contracts, they carry protocols until the protocol either can establish its own validator network and create its own mainnet, or until it can get decentralized enough where it's not relying on one single mainnet. And that's really going to be interesting for a lot of these tokens as well. I know I'm getting off topic, but this is actually pretty interesting because there's a lot of tokens out there from the previous generation. For instance, I was talking about today in Discord, Patcoin. Patcoin has something like 18,000 validator nodes running in it, which is significant. And actually, the Patcoin itself isn't valuable in the sense of what it's doing. It's kind of just basically a staking validator node system, but the ability for people to basically outsource their decentralized network database can provide value in that kind of sense. So, if you have a lot of people who have all banded together and created a validator network, that itself is valuable because you've basically created a network effect that can create security for people who need it. So then that can help with offsetting, transaction fees and whatnot. So it's actually fairly interesting to see how this entire network is developing through many different ecosystems. But to get back on track, because I know we've gone far away from what we're trying to do, we can tackle the USDT and issues and liabilities now. I think that would be a good one to tackle about here. So if you want to mention anything with this, right, Baron? I know you know some stuff about this. Feel free.
Correct.
I don't want to
let's come at Tether first of all. Give we have to kind of respect the people that are there's a number of people that are new to the show, that are new to cryptocurrency, that don't know the long sordid history that is Tether. So if you could kind of give us a nickel tour of what it is, what it does, and what it is not doing that it claims that it is doing, and the basis of why we should be concerned right now.
Sure. So USDT or Tether, as we've seen, is kind of like the front runner when it comes to stablecoins. They've been around the longest. They've basically helped build out the network. That's why they have the most token pairs associated with them. But they're also the most controversial, specifically because they are taking the bank system of fractional reserve lending and running it to an extreme level. So currently, as of, I believe this article was written on the 9th of this month, or the 8th of this month, they own currently only 3% of their total holdings in actual physical cash. So in a bank account, ones and zeros, basically. Now, in the past, that has been significantly higher, up to anywhere of 50 to 75%. They've never run a really 100%. They never run a tight ship. That's kind of the deal with Tether, and that's why both Red Baron and I suspect they have some kind of nod given to them. Whether that nod is for an eventual rug pull, basically to get that price down where they want it to be, so that they can rebuild the system how they want it to be built, or whether they plan on doing this kind of as a kind of Federal Reserve in limbo, basically. But ultimately, it is very suspect and very risky in terms of they are directly violating, many legal systems across the world.
Candidly, I view it as kind of an unregulated slush fund for black ops, and the deep state, if you will. That's my take on it. Can be used.
Yeah,
I mean, there is an air of legitimacy, but don't think for a single second there probably is not those elements within that, because the nod is very clearly there, because they should have gotten slapped with a lawsuit. They should have been in line ahead of XRP for any kind of securities and exchange shakedown.
Yeah, I mean, that's very true. And they were actually, brought to court by the state of New York, and all they got was like a slap on the wrist, like a few $1 million in fines, which is nothing compared to what they have, And they actually, a lot of what they own is actually, it's interesting how they do this. So basically what they'll do is they'll print, I'm putting quotes around this, you can't see me, but they'll print a bunch of money. And then what they'll do is then they'll use that money to make more money for them. So they're basically just running a bank, but they're not, I don't know if they're even registered as a bank.
They're not.
And what they're doing is they're buying Bitcoin. They're buying debt-backed swaps and all this other kind of stuff. And the debt-backed swaps they're buying aren't even backed up. Like they're buying all kinds of assets and they're just sitting on it. And ultimately, what they're hoping is that no one will call them on their bet and try to directly cash out through the USDT company. And so far, that's been true. I mean, when you go to cash out USDT, are you using USDT, the company itself? No, you're using Coinbase, you're using Binance, all these other third parties who are just able to do a simple swap. They want the USDT, so they'll do the swap for you. They won't even go to the USDT company. And they know this, and that's why they're able to run this Ponzi scheme with such low margins, because it doesn't matter. No one's ever going to ask them for their money. It's kind of like the Federal Reserve and what is that? Fort Knox. Fort Knox. No one ever goes to Fort Knox.
Yeah, you didn't even know the name because no one.
Exactly.
It's so irrelevant.
Yep.
Yeah,
Exactly.
well, effectively, basically, these guys are up in the game that the Fed did. I mean, they're pretty much, at least the Fed's printing paper. Even, I mean, these guys are just click, just a couple of clicks, and hey, I think I'll go buy myself a couple $1 million worth of Bitcoin. Click, there you go, good.
Exactly.
I mean, they're literally just inventing money that can't even be held. I mean, that's talk about stepping your game up, and the very idea that ever got allowed from the drop tells you that there are some very powerful, very organized, very, very entrenched people at the helm, or certainly very close to it.
Yep. And, what I was saying before about the rug pull, I mean, this could be basically, if they needed someone to stand in the gap, they couldn't actually come out and create a Federal Reserve central bank directly into the crypto market right off the bat, because that would show people the hand too quickly. Everyone would know, we're creating a central bank digital printer, right? Okay, well, now we know we're going to central bank digital cryptos. Okay, well, everybody's going to buy into cryptos right away, and then their whole advantage situation where they're buying in the bottom and then we're piling money on top, so there's still the 1%, that all goes away. And that's ultimately their goal. They don't want us, plebs, to be, up in that 1% range, because that disrupts their power structure, and they don't want that. So, I mean, and you can see this too from that recent Poland guy who drowned, he was like in his mid-40s. And that guy was very controversial, on all of the mainstream media websites. Everyone didn't like him, right? Well, what does that tell you about him? Probably that he knew some stuff that he wasn't supposed to know, or was talking about some stuff that he wasn't supposed to talk about.
That's crazy talk.
Yeah. So anyway, he drowned. That's just how it happened. And that's what happens to billionaires that aren't part of their club. They don't like that. So keep your money quiet if you're ever going to get to that level. That you don't want to be walking around like he was with women on leashes and stuff, flaunting your wealth. It's just not a good look. Yeah. So that's just for your information. But to get back to Tether here, so Tether actually has had a long storied history with this kind of thing. People have been calling them up for a long time. It's almost become like an urban legend. Like the USDT rug pull. When is it going to happen? And it's the thing. It's just like the XRP case. It's always just looming. It's imminent. It could happen at any time, any day, and they have a history of being brought to justice before. And ultimately, I just don't see, unless Tether becomes a central bank, it just can't continue on forever. And that's why I say, like, it could be a potential ultimate rug pull that they pull, just to get everyone out of the market so they can
It could
buy
be
it up
the
and
thing that
rebuild it from
chases.
what
Yeah,
they want.
it could be the thing that is kind of pretty much the death blow that really starts a hell of a downhill slide for the crash that I've had forecasted. The big crash, not the one we've been on a 5 week downhill slide. That's not a crash. That's just this downhill slide. But it very well could be the canary in the coal mine, or it could very well be the spark that sets off the whole blaze.
Yep, exactly. And that's really what we're dealing with here. Is we're dealing with a risk and just trying to do risk control. So that's why we oftentimes say, like, keep your USDT and USDC until you need to use it, or DAI. There's lots of stablecoin options. There's even something called TUSD, which is True USD, and True USD, in my opinion, is the one that's the most backed in terms of it's audited regularly. They show their balance sheets, they show that they have the holdings that they claim to have. But one of the biggest issues, I think, or BUSD, for instance, one of the biggest issues don't think people realize is that what is the incentive for running a stablecoin? Like, if you're truly going to run it like pro bono as it's supposed to be run, there's not really any incentive to it. You're not making money. It's
no
one-to-one pegged.
Correct.
Yeah. So there's even like the best, like even TUSD has to be pulling something shady because they're doing something in the background just to make themselves stay afloat, right? Well, who knows what that is? Maybe they're giving loans out. They're doing some kind of fractional reserve lending. Because that's really the only way I can see it working. It's like, what's the point of having a stablecoin or running a stablecoin business? Because those things can't be cheap. You're having to constantly deal with exchanges and all that kind of stuff.
Of course, you got infrastructure and all the other stuff that goes along with it. So.
Yep. So that's basically what I was going to say about Tether. But Tether that's why it's risky, basically. So you're dealing with lots and lots of history of shenanigans, and you're dealing with a lot of potential issues with reserve and trying to cash in. If there is really, it's a serious rug pull. You could be getting 3% to 10% of your actual value in coins. So it's just something to keep in mind if you're actually going to be doing something.
A big question that's been coming on the Discord from a lot of people to me, and I'm certainly sure to you too. Should I be holding Tether? And again, we're not offering financial advice here. We're simply pointing out the reality of the situation. Should you be holding your money in Tether? Well, given what we just said, probably not. But again, it's the big trade coin out there. USDC second, that's available on Coinbase and stuff like that. But one thing that we should make abundantly clear to everybody is, I think a lot of people tend to look at stable coins as being, it's guaranteed money, it will always have value, and that's not true, is it?
Yeah, no, it's not. Because it's pegged to the dollar.
Correct. It's that, and then there's also, there is such a thing as a liquidity issue tied to that. Not only that, but you are also the very idea of stable coins goes against crypto in general, is what you were saying, and you're reintroducing third party risk by doing this. I mean, you're basically kind of putting your trust in a third party, which goes against the whole narrative of crypto in general. So stable coins are not the Valhalla of stability that people want them to be. So you must trade, and basically people that I know several guys that are in the Discord that are holding millions of dollars in stable coins that are probably hearing this information for the first time. Probably not going to sleep too well tonight because of it. But the truth of the matter is like, it's a crypto shell game, guys, and I want you guys to be very, very sure that you understand that it is not, just because they call it a stable coin doesn't mean it's necessarily stable. Stable as compared to what? The US dollar? Well, that's probably a topic for another time, but the thing is like, don't think that just because you own it, it is completely 100% insulated against the greater world out there, because that's absolutely not the case, is it?
No, it's not. And I mean, there's also vulnerabilities when it comes to flash attacks too.
Correct.
You can get you can get, the value of these stable coins can be attacked through flash loan attacks. And, if you have a buy order or a sell order at some ridiculous point, or even just like on a short stop kind of situation, and there's your exchange that you're on just happens to be the victim of one of these flash attacks, and you could get your stablecoin could go from $1.45 to anywhere down to like $1.25, just because of this flash loan attack can artificially put pressure on these thinner markets, and then you're going to get issues with actually finding correct price findings, because this
price discovery
artificial loan basically came in, swept out the entire market, and brought it over here, or dumped a bunch of coins into this market, and now you have less of what you thought you did, and because of this potential sell order. So, it's something just to be aware of. There's always risk in these situations, and especially since we're in a new, relatively unregulated market, which seems to be actively, purposefully unregulated, in my opinion.
I would agree.
Like there's a lot of shenanigans that are left to be done just because they want to keep that uncertainty in this market. And they want to keep people a little bit on their edge, so they're not really dumping their entire life savings into the market. And that's, in my opinion, because what they're trying to do is they're trying to make sure that they can buy in the bottom, so that, like I was saying, they don't create a new 1% that maybe doesn't support what they do. So, yeah. So yeah, I mean, that's really what you can cover with Tether. Tether is just, it's a rabbit hole that you can take you down a lot of different ways, and there's a lot of fear and uncertainty and doubt associated with it, and that is by design, because they want to keep people on their toes. So make sure that you're aware of these things. I wouldn't say go full panic mode, and make sure that you because I've been in this space for a few years now, and I've seen this USDT narrative playing out for a while. You never really know when it's going to be pulled. You just know that it can be at any point. So don't go crazy with fear, but make sure that you just keep aware of it. Keep your eyes out. If you see any kind of rumblings about this kind of thing, you probably see something, ahead of time. Maybe like USDT gets served with papers or something like that. That's probably what you'll see running up to an actual case.
I'll tell you, when I just saw that turn up on Coinbase, it really did make it really did make me scratch my head. I thought, really? Because they've already got USDC. I thought, why would you do that? Why would you, so it does contradict the narrative. I mean, if they're so paranoid about having XRP, why would they, in light of the rumblings that are going on about Tether, why would they list Tether? Because that just doesn't make sense.
Yeah. Well, I think Coinbase is a lot more paranoid. They pretend to be a lot more paranoid than they actually are, because they have to try to have this air of the sane man in the room. They're like, you all are crazy out there in crypto world, but we are the rational investors, and that's kind of a narrative they like to keep with. But as we've seen over time, they get money hungry too, and they start to want to get access to these new cryptos with huge liquidities as people start to FOMO into them.
And I think that's probably what it has a lot to do with it. They figure, well, hell, if we bring Tether over, Tether and all the good that can come from Tether, it makes it easier to move your coins onto our exchange. So I think it was a measured move, because they just went public recently, and they're posting trash. Like, I mean, most of the stuff they're just going for volume over quality, clearly. And so when they put Tether up there, I thought that's just a straight money move. That has nothing to do with making it easier for the consumer. I think it's just so that they can on-ramp more customers. I truly believe that's what it is.
100%. I mean, with like you mentioned, with them going public, their incentives have changed. They used to want to create a great product so that they could sell it to people, and now they're trying to get as much money through the door as they possibly can, because then they can show their investors that, hey, look at what we are making now. We're doing this much better than last quarter. So that's the classic trap of becoming a public company. You have to cut down your quality a little bit just to increase your bottom line.
Exactly. And as bad as it is now, we haven't seen the worst of it. Wait till the regulations start coming and everything else. It'll get these are the good old days right now, folks. I'm here to tell you that much right now. There has never been a business that deals in money that gets better. over time. I can tell you that much right now. I mean, not the real estate market, not the bond market, not the stock market. These are the good old days. You'll be able to look back, 20 years, if there even is a crypto market, 20, 25, 30 years from now, you'll be able to look back. And this is back like the bootleg days of alcohol. If you wanted to start a still in your backyard, you can do it because there was no government. That's what it is right now. We're in the bootleg time of crypto. But here in the future, not too distant future, it's not going to be that way. So right now, they're just throwing all the trash they possibly can out there. But a lot of these coins that they have listed on Coinbase are going to wash out because they're just absolute garbage. And I look to see probably a third of those being taken off within 24 months would be my guess.
Oh yeah, for sure. I mean, like you've talked about this before with Orchid. Orchid is one of those coins that I think is just going to wash out because
Absolutely.
What is it providing? It is an advantage over traditional VPNs. Like that's what Orchid does. Is just a blockchain VPN. So you're saying, oh, okay, so I can buy VPN minutes basically, or set up a node, and okay, that's great, but I can also do the same thing with a normal VPN. Okay, what's my advantage here? So there's a lot of coins out there because. During the initial onset of blockchain, you had the same thing with the .com bubble. It's like, let's just throw everything on the internet and see what sticks.
Anything with a .com behind it, you bet. Yep,
exactly. So let's just see what works with any kind of technology, and then let's just put it out there. And that's the same thing with blockchain. It's like, can we do blockchain, pet grooming services? I've seen Proppy. Proppy is one that is kind of older. It was a blockchain home purchasing service, but all it did was add more steps to the process. So, I mean, what they were talking about was, hey, we'll actually streamline it so that you can get all these pre-printed out things. But it's like, okay, but as a investor, now I have to figure out how to use your blockchain technology. Then I have to, you actually find someone who will take your Proppy coins. Then I have to buy some houses with these Proppy coins. So it's just like, it's so many more steps just to do the same thing you're already doing, just through a bank, and the system's already set up. It's the users are already there. You have to transfer users. So technological increases don't always actually carry forward because ultimately increased tech does not mean increased usage because users are what dictate the markets, not the other way around. Tech can just improve the user process. Correct.
Okay, what else you got? We kind of wandered off topic here a little bit. So what else you got for us?
So we can go over Reef a little bit. I think that would be a good topic
absolutely.
since it is the kingpin of interoperability here, as I was saying. But you got my screen up here?
Yep. I do.
Okay. So how Reef works actually is it's an automated market maker, similar to what's a good example of this? Like Cake, Cake or Uniswap or Pancake. Yeah. So these coins, basically what they'll do is they'll have an exchange they're associated with, and then they will be able to provide liquidity to that exchange or other exchanges based on the need. So, for instance, 1inch utilizes other exchanges. They're kind of a good example of the inverse of Reef. So, Reef provides liquidity to lots of different exchanges, and 1inch takes liquidity from lots of other exchanges. So, I guess that's a good way of thinking about it. Is 1inch is the inverse of Reef. So what Reef will actually do is you can take these Reef tokens, you can bring it to their mainnet, and then you can onboard your tokens into the Reef mainnet, and then through there they will actually be able to send your token pair to these different exchanges. Like for instance, Avalanche has an exchange. Z token, we had that on our Platinum for a while. That was one of the Avalanche exchanges that existed. Avalanche was an up-and-coming layer 1.
Yep, we still have it on. It's still on the Platinum subscription level. Yeah.
Okay. Well, so Z is a good example of an Avalanche exchange. So they have, similar things. They have automated market makers. They're an automated market maker as well, but they don't have access to every other exchange. I think they have 3. They have Ethereum, Binance Smart Chain, and Avalanche. That's what Z is for. But there's a lot of exchanges out there, and as you probably have seen if you've been around the DeFi space for a while, see if Cosmos has their own exchanges, Ethereum, Binance, and Polkadot. I think Reef started off on Polkadot. That's kind of how it cut its chops there. But what it's intending to do is to provide liquidity to the entire ecosystem. So you'll probably end up seeing ZillSwap providing liquidity to basically what they want to do is be the one-stop shop for liquidity in terms of emergencies. So because what they're going to be is a little bit more expensive than your average market maker because of their more complexity in terms of having to be able to access all these different chains. So there will be probably a massive pool at the end of it because so many people will see the value being able to get access to all these different ecosystems. A lot of people are going to go towards Reef to stake their coins in Reef so they can get these huge amounts of volume because there's going to be liquidity issues. As more and more people come into the space, you're talking about, what's the total user cap right now of the world in terms of actually using, cryptos? It's probably less than 1%, probably 0.01% is probably what we're talking about. Mm-hmm. So, as that becomes, 1%, 5%, you're talking about 10x, 20x, 50x, 100x in terms of users. The liquidity issue is going to become very, very big because most people are holders. They're not staking their coins on these liquidity pool programs yet, and that causes a liquidity crisis issue, which can cause the price to, as we've seen with the crypto run-up that was just recent, you see these 10x's and stuff. Well, what is that 10x coming from? That's because people don't sell. They just hold and they hold and they hold. I mean, it's like the whole AMC, GameStop thing on steroids. Basically, they're like the crypto people are the original, AMC apes and the original apes of, GameStop. These people that just hold forever. And, it's not a short squeeze per se, but it's the intended purpose is that the price just goes up and doesn't stop going up because people just don't sell. And that really is going to become an issue as cryptos start to be getting their purpose in the future. Because the purpose of cryptos is basically as a means of exchange at the end of the day.
Right.
People want to use them as the forms of buying things.
People are being drawn into the market right now with a lottery ticket mentality, and that is not the be-all say-all intention of these tokens. As you hit it exactly, is they're supposed to be a means of exchange or a means of commerce, and so you've got a big problem that's going to have to be kind of weaned away here with time. Again, getting back to my analogy that these are kind of the bootleg days, the good old days, because we're not going to see this hoarding of coins and tokens forever. Because they're going to have to be released, they're going to have to be put to use or washed out or whatever. So that is kind of what we're having is all these people that are coming to the space right now are not looking at it from a utility standpoint for the most part. They're looking at it from an investment standpoint. And it's causing a secondary line of problems for future growth and really getting the broader show underway. Would you agree?
Oh yeah, for sure. So yeah, I mean, that's really what you're talking about here is like nobody's buying pizza with Bitcoin, just because nobody wants to be that guy who spends 20,000 or 10,000 Bitcoin on a pizza.
Exactly.
And only to see that become a fortune later on, so that's kind of the issue. And this is, I don't know if you guys ever seen Mike Maloney's Secret Hidden History of Money or anything like that, but he's a great documentary, and if you haven't checked it out, I would highly recommend it. It's kind of what broke my teeth on this whole, understanding money and how money operates. But he made this good point where he said, good money or bad money drives out good money, basically. What that means is that when you have this worthless fiat that's flying around, everybody knows it's worthless. Who knows anything about money at this point? That's the first thing they're going to spend. They're not going to spend their Bitcoin. They're not going to spend their gold or silver. They're not going to spend their, any of the other cryptos because they know that those will, relatively speaking, increase in value. So they're going to spend onto the economy their worthless stuff. And this is what happens when you see runaway inflation in Venezuela and Weimar Republic, Germany, and stuff like that. Because what you're seeing is people basically just spending away their worthless fiat as it becomes inflated, and then going toward their deflationary forms of income or forms of store of value. And that's the conundrum that you see with crypto right now. Is that crypto, as we all know, is a great means of exchange. It's more efficient. It's less third-party risk. It's more able to be transferred throughout the world without having to go through customs and, only being able to bring $10,000 with you on a plane and whatnot. So there's lots of advantages to cryptocurrencies, but there's not a lot of places to spend cryptocurrencies, and even the places that do receive cryptocurrencies as a form of transaction, they're not getting a lot of transactions because people know that this new fiat or this new not fiat but this new cryptocurrency situation, that they don't want to spend good money. They want to spend their crap. So, and that's the kind of the catch-22 situation, and that's why automated market makers kind of fill in the gap in that kind of sense, because you don't have to actually sell your tokens. You can continue to hold on to them, and they can actually provide liquidity in the space to make those transactions actually functional. Otherwise, there wouldn't be any kind of real way to actually make people actually exchange value, and the whole trading space would kind of break down. So, at least in the DeFi space, exchanges kind of handle that on their side, and that's where you get like this crypto pool that people talk about, where they're doing fractional trading, and that's why you have like these kind of, we're shutting down for maintenance during times of liquidity crises and stuff, because they're not able to actually access or source enough cryptos to balance their balance sheet, or they're actively staking cryptos that they're said to be holding for you. I mean, that was an issue with Zill back in January. It was going down on Binance and all these other exchanges, they're going down for maintenance every few weeks, it seemed like, because of network issues that Zill was experiencing. But a lot of people weren't buying that because they were still able to, transact on other exchanges. So, for coins that have a lot of staking potential and stuff like that, where people just want to lock it up, that's an issue that you get, is you get these liquidity issues. And that's one of the drawbacks of staking as well, is that, you have liquidity crunches because staking just doesn't work for lots of liquidity. That's why you see now people moving towards more of this liquidity pool type of mindset, with Flare Finance coming out, and you have 1inch, Uniswap, Shiba is now like this. You have what was the other one? You have all this kind of liquidity pool staking alternatives now, because they've realized that as we grow as ecosystem, staking just isn't going to cut it unless you're actively staking to a validator node kind of setup. So maybe they're eventually going to do some kind of liquidity pool validator node combination as a means to continue the liquidity in the market, while allowing people to get access to validator nodes and network integrity, because that's what validator nodes do. They create network integrity by having multiple distributed machines all comparing results and figuring out how the blockchain looks. So, I mean, that's kind of what you're seeing there, in my opinion, going towards the future, is this kind of new emphasis on liquidity and making sure there's enough liquidity in the market as people start to onboard. So, I don't know if you have anything to add to that, Red Baron, but that's kind of what I was going to cover with that. I can continue to go on with the Reef if you want. There's some more stuff in there, but if you want to add anything to the liquidity aspect.
No, that's good. Give me just a second here. Let me take a little pause for a little quick commercial break here. So you guys are new to the live stream. Appreciate you being a part of what we're doing here. If you'd like to join us at our free Discord, you can do that at theunfairadvantage.chat. That's theunfairadvantage.chat. That's our free Discord where we have price calls, we have group crypto therapy on a daily basis. It's kind of a good community if you're looking to get involved in something with a group of people that take crypto seriously, not spammers, not shillers, not skateboard kids. It's a damn good group. I'm quite proud of the group and the people that have become a part of the project. And we're a small group, but I'll tell you what, if you're looking for a home where you can really get into some good advice, you can hang out with some people. There's some very cool people in our group. We've got multimillionaires, billionaires actually. We got people that are from third world countries and stuff like that. We all operate on a completely flat level playing field. Everybody's treated the same, and it's a hell of a good group. I'm sure if you're looking for a place where you can get in and get good quality information, I'm sure you'll really enjoy being a part of it. So that's at theunfairadvantage.chat. And if you'd like to be a part of what we do as far as our predictive AI powered charts, you can go ahead and subscribe to those over at fibbycharts.com. All right, so back to Bear.
All right, so as you can see, Reef. So Reef, basically what it's doing here is it's creating liquidity for the massive amounts of markets. I've covered this before, but to go further into this, so it's also similar to Uniswap in terms of it actually has has governance tokens associated with it as well. So it's not a centralized project in terms of you have no control over it. If you're a majority stakeholder, as you've mentioned before, we have a lot of people in our Discord who actually are big holders of this coin, is that we could actually band together and create essentially something like a political party to take control of Reef, so to speak. Yeah. So, I mean, as long as we hold enough to actually, have either majority or the majority of the staking voters, you can pretty much do whatever you want with this. And that means if you want to onboard a Cardano pair, if you're big on Cardano and you want to try to get everyone on board with that in the Discord, then you could do that. And you could make sure that you get your Liquidity and your Cardano pair as well as your Reef, and then you can get that on there. You can get the rewards that you want. So it's a good way actually to, if you're a hodler, not really a trader, it's a good way to create additional revenue with what you hold. Now, yes, there is an issue with something called impermanent loss. But as long as your token pair moves together, then there's no real issue with that. So if, for instance, if you think Cardano is going to run up and you think Reef is going to run up, you don't have anything to worry about, because if Reef goes to $4 and Cardano goes to like $400, you have the same scale in terms of increase in growth. There's no impermanent loss, and during that entire process of however long that takes, 1 year, 2 years, you're making a percentage of the value of every transaction that utilizes your trade pair, which it will be significant coming up here as Liquidity really starts to take off, as many more people are onboarded and the ecosystem has really started to be flushed out in terms of, what I was saying before is 0.01% goes to 5%, goes to 10% of the entire world's population using these Liquidity, this blockchain technology. You're talking about a massive amount of transactions, an insane amount, really. And if you're taking a small percentage of that the whole way through, you're talking about, incredible returns on investment. And there's not really a lot of risk associated with it in terms of what the counter risk is, for instance, doing leverage trading or shorting or something like that. There's a lot more risk involved there. There's relatively little risk in terms of Liquidity pairs. So it's really quite an interesting protocol. If you guys are looking more into getting into Reef, I would highly suggest taking a look at liquidity pools and maybe taking a look at what you have in maybe your holds, and see if you want to provide some liquidity to the network, because it's a good way just to, like I was saying, make some money on the side. And there's also, even like I was saying down here, there's staking too. So if you want to maybe stake to the validator nodes, then you can do that too, and that provides network security. And when you're staking, there truly is no risk.
Do you know what they're paying on that right now? You and I haven't had that discussion for a while.
I have not actually taken.
If anybody knows, post it in the chat. I'd like to know, because I'm single-handedly responsible for onboarding a lot of you guys into Reef, because of my initial post on that just made it go absolutely wild. I posted on that and I said, I think this thing is going to be something. And within an hour of me posting, it shot up 90%. And so it's come down as the whole market has, but I think this time it's going to exceed 90% so fast it'll give you whiplash. So if any of you guys are watching or know the stats on that, or know what they're paying out on staking or Liquidity, certainly put it in the chat, because I'd like to know.
So how a lot of these work is they work based on the individual nodes themselves. So the nodes will actually set the return, and then they'll take a small percentage as a fee. So there could be something like that we're talking about, where there's a range of staking options available, and there's different advantages. Some of them will pay out more often. Some of them are a little more sketchy than others, because they are handled usually by some kind of third party. Some of them are really, secure. When I say they're handled by they're sketchy. They're sketchy on the payouts. They actually can't take your tokens, so your tokens are secure. So maybe they pay, they're a little lazy about paying, so they pay like bi-weekly, or they pay like every once in a while when they kind of feel like it. So that's where you'll get the fees. So the fees for those guys will be really low, right? Because they're just kind of like, whatever. You're going to keep it in here anyway, so I don't care. I'll give it to you when I feel like it, kind of. And other people are running it more like a business, so they're running it like they're just hammering it out. Like they'll give it to you every 2 days, every 4 days, every week. So that's what you're really talking about here.
So
in terms of,
Stark is popping into the chat. So Stark Crypto
sure.
says 63% APR. Is that right?
Is it for Pancake?
I think we were talking about. Is that for Reef? Specifically, what are you talking about there, Stark? That's for.
So Pancake.
That's the Reef BNB, is what he says.
Okay, so that must be for the liquidity pool return on investment.
Yeah, which, as you said, can be a little bit dicey.
Yeah. So yeah, for Reef and BNB, that would you definitely lose Reef tokens as the price went up for Reef, because BNB is not going to gain a huge amount of value, in my opinion, over something like Cardano, just because Cardano still has a lot of room to run because it hasn't released the smart contracts yet. So, BNB, I wouldn't like that one so much, but that's probably why they're paying so much in APR, because APR is really the way you offset your impermanent loss.
Mm-hmm.
Yep. So that's what you're seeing when you see really high APR on liquidity pool investments. Usually that means it's a more risky investment in terms of permanent loss issues. But if you're doing, if you put your coins into the pool of at the top, for instance, like if we recently had bought Reef when you had mentioned it before, and before it had run up 90%. And then you had put it into the liquidity pool for Reef Binance token, and then you had waited till it got up to like 4 or 5 cents, and then you had put it into the pool then, and then you had ridden it down. Your impermanent loss would actually be relatively small. There'd still be some there, but because you'd posted it at the top, you really wouldn't lose all that much. And then when you actually buy it back, or if you took it out at the bottom, for instance, after having posted it at the top, you'd actually have lost more value in the Reef side, so you'd end up with more Reef tokens, relatively speaking, than you had put in, because you would actually have sold BNB tokens all the way down, because BNB was losing values more slowly than Reef was, and you would be trading those BNB tokens all the way down for that Reef in a kind of, not like 100%, like a ratio kind of way, like as the price decreases in value, there's kind of a graph. I'll write it down. Let's show you what the graph looks like here. But it basically looks something like this. So that's kind of what the impermanent loss graph looks like. So as the price falls down, it kind of bottoms out, and then you kind of slowly lose it over time after a certain point. So you don't really have to worry so much if your token that you want is losing more value on a fall like that, because you'll end up with more of it. And then you get the transaction fees on top of it, so it's actually pretty good. The issues you might have to run into in that kind of situation is people all pulling the tokens out at the same time, which causes a liquidity pool issue. But ultimately, if you just keep your tokens in there, the liquidity pool will be filled back up, because it's not like Binance is going anywhere anytime soon in terms of their smart contract system, their Pancake swap. So that's kind of the issue that you see with Reef. So it's just something to keep in mind. If you're going to do a token swap pair, then make sure that you're doing something that they'll run up together. FLM is a good example, actually. FLM isn't anymore 100% staking value anymore. So just so you guys know, it's currently been reduced. I think last I checked, it was 60% for the Switch.io token. FLM combo pair. And
that's
then
Flamingo for you guys that are not paying close attention. So Flamingo has been a very top push for us. I shouldn't say push, but it's been a top suggestion, and still damn good return. But those 100% inside of a year time, that's an over and done thing now.
Yep. And what you'll notice with these coins is that these coins will actually do these things, especially when they're first launched. Liquidity events, basically, where they'll offer really good incentives over a long period of time. In this case, Flamingo lasted a lot longer than I thought it would.
Yeah, it did.
But these liquidity events, basically, they'll pay you in the native token. In this case, it was Flamingo token, and then you'll receive value on those tokens over time. And then the idea is that you're locking up your tokens with more and more of the same kind of issue. So you can lock up the Flamingo token and get more Flamingo tokens for locking up your Flamingo tokens. And then the Flamingo pair that I was always big on was the Flamingo Neo pair, because Flamingo and Neo are kind of in the same relative run-up potential. Neo, little less so, so you'll probably still end up with less flamingo, but the offset is relatively small because you're still getting 30%, which is really good, especially since you can just compound it right back, And Neo itself is relatively undiscovered in terms of a layer 1 protocol. It still hasn't been utilized. It's kind of like Tron in that regard.
It is very quiet. It is very, very unmentioned. It's been in the background for a while.
It's older, and it's just good in terms of its quality. It doesn't really have a lot of issues, but not having a lot of issues is actually a good thing when it comes to a layer 1. So, and it's got gas token too. It's a dual token system, kind of like Theta. Theta's got the Theta token, the T-Fuel system token. So, Neo Gas is something we probably want to keep an eye on because the price is actually way down from where it was at its all-time high. So, if they introduce some kind of staking program or some kind of system program to get that value up because they want that, you could see Neo Gas going like on a moonshot, kind of like T-Fuel did, because people kind of forget about these secondary tokens. They just focus on the first token, the Neo token or the Theta token, and then all of a sudden people realize that there's a second token, and they're all big on the first token. They want to go buy into the second token, so you see that second token run up really quick. So that's kind of it's an idea to keep out for. It's the same with PPT. PPT actually has a secondary token too. It's called PXT, and not a lot of people know about that one. So it's something to keep an eye out for if you guys are interested. But yeah, so that's kind of a rule of thumb. It's like if you see a good token, look for the secondary token, because usually that secondary token is if the first token has had a run up, the secondary token's not usually far behind. So yeah, I think that's pretty much all we've covered here. You got anything to add, Red Baron?
No, I think that's pretty much it. I just wind you up and let you do your thing. So my throat's been killing me, guys. If I'm not talking an awful lot here, because my throat. Some of you guys are longtime listeners know that I have some issues with my throat, so I'm trying to kind of keep it to a bare minimum here. So got to stay fresh for tomorrow's show. So I just kind of let Red Bear step to the front. So that's cool. So if you guys got any questions, get them in here real quick. And meanwhile, of course, obviously, if you guys are new to the broadcast, love to have you join us. Like and subscribe. We've got a lot more stuff. Normally we do throughout the week. We do Monday crypto chats, which is what you just heard here, where we cover a topic. And Barry, you're going to be doing some individual stuff. You've given me one here. We got to get in the can and get it uploaded. He's going to be doing some reviews on individual coins. What's your next coin? What was the coin you just gave me? I haven't got it all processed yet. What was the one you just gave me?
So I just gave you 1 inch. I'm going to be following that up with Telcoin here, and then I'll probably be doing XTC, because XTC is something that's really caught my attention here, and I really want to take a look at that one in a deep way, because as we've talked about, it looks like it's part of the ISO 20022 program, and as we know, that's kind of like the touch of Midas there. It's like you get that, if you get that touch, you're good.
So he's going to be doing reviews on deep dives, is basically on every single coin. So we're going to have those all archived on FibbyCharts.com, and we're also going to be having them archived here at the YouTube channel. So if you guys want to know anything about a certain coin, eventually he's a busy boy. He's become a victim of his own popularity here. So I warned you. If you're going to be a public figure, you're going to be a busy boy. So, but that's all good. It's all good. We're providing good information here, and people are receiving it really well. So you guys are sucking this stuff up as fast as we're producing it, and we've got a lot more good stuff coming here. It just takes a little time to kind of you got to pump and pump and pump on that handle before the well starts putting out the water, but it's coming. It's getting more and more all the time. So I'll tell you what, guys, we're going to go ahead and we're going to wrap this one up. So you guys are that are new to the broadcast, again, obviously join us at the unfairadvantage.chat. Check them out over there at fibbycharts.com and get involved in that. And I will be doing my regularly scheduled broadcast with price predictions and forecasts starting tomorrow. So until tomorrow, be safe, be good, and be good at it. Peace and hair grease, baby.